as stocks continue to reach record highs is Oakmark Funds partner and portfolio manager Tony Coniaris. Tony, good to see you. So I want to start off asking about one specific call of yours, Centene Corporation, because it seems to have taken a hit a few days ago after United Health and sort of more of these care providers spending more than expected in Q4. Is this a specific thing to Centene where you think the selling in that is overdone, or maybe the whole space?
Yeah, our investment in Centene at Oakmark is specific to Centene. What you saw with Humana had to do with Medicare Advantage. Centene's the largest provider of Medicaid and healthcare exchanges. Only 15% of their business is Medicare Advantage. It is a problem area for Centene, and that's part of our thesis.
It's a problem area, and that's part of your thesis in what way? You think they can fix it?
Yeah, I'll explain. So it's a $75 stock that's supposed to make something like $6.70 this year. That's 11 times earnings. A very reasonable price. It's traditionally traded around 15 times or north of there. Private market values are higher than that. But they're losing 80 cents within that 670. They're losing 80 cents in their Medicare Advantage business. They bought WellCare a few years ago. They grew the business too fast. And as everybody knows about insurance, growth can come at a cost. And so their services suffered, and therefore the government star rating suffered, and they need to fix that. Today, it's costing them 80 cents a share. If you back out those losses, the core Medicaid and healthcare exchanges business, you're actually paying a more terrific 10 times earnings for that. And if they earn half the margin of their Medicare Advantage peers someday by turning that around, just half the margin, it's trading closer to 9 times relative to that trading history in the mid-teens. That's a terrific value, and we have confidence that management can turn it around.
Okay. What gets my attention here is Phillips 66, another name that you've bought into recently. At a time where we've seen oil prices moving lower, why does a refiner look attractive here?
Yeah, so I think sometimes on a day-to-day basis, refiners have a high correlation with oil prices, but that doesn't drive the entirety of their business. Mm-hmm. And that's particularly true for Phillips 66. Because Phillips 66 gets put in a refiner bucket at 5 times EBITDA. It gets categorized and compared to the pure play refiners all the time. That's only 40% of their business. The other 60 is a much higher quality and more stable business in things like midstream pipeline assets and marketing assets for like franchising gas stations. And a chemical JV with Chevron that's very profitable. So they've got 60% of the business, which is a higher multiple, more stable business. And it kind of gets grouped in with all the refiners. And day to day, the stock sort of trades around with oil prices, but that's not the key driver to the stock price.